We'll break down what banks and other lenders actually look for, how you can position your business, and the common mistakes to avoid. A business plan will show that you're serious and you're strategic. So ask questions and don't assume anything. Get all the information you need regarding the loan. Hello and welcome again to another episode on the Prosperity Thrive Drive channel. My name is Charity Mwangi, your host and a financial consultant. In today's episode, we are going to look at how to prepare for a loan for your business as the business owner. So if you've ever been denied a loan, feared applying for one, this episode is for you, and stick around for tips. So someone may ask, why do businesses need loans? So loans can be a tool of growth, expanding operations, increasing inventory, buying assets, or even handling cash flow gaps. So in Kenya, most SMEs fail to scale because they either fear debt or they take it without proper planning. So not all debts are bad. It's how you manage and prepare for it that determines the success. So let's look at the things to get in order as a business before you apply for that loan. Number one is to know the purpose of the loan. You need to be very specific. Is it for boosting the working capital? Is it for buying the inventory? Is it for buying an asset? Or is it for bridging a cash flow gap? Knowing the purpose of this loan will help you put the right strategies in place when it comes to repaying the loan. And lenders also want clarity. Ambiguity translates to risk. Number two is clean and consistent financial records. Open a bank account and separate the business finances from your personal finances. Your business should have at least 6 to 12 months of records. Keep a cash book, a profit and loss statement, and even a balance sheet. And if you're using M-Pesa for your business, ensure that you download all those statements so that they can show the transactions that are going in and out of your business. Of course, you can use tools like Excel, you can get the free apps or even the affordable apps to record all these transactions. Number three thing you need to have in place is the business registration and compliance. So ensure that you've registered your business either as a sole proprietor, a partnership, or even a company. And in another episode, we've discussed these three structures of business, and you can check that episode out. The other thing under compliance is to ensure that you have a valid KRA PIN certificate. And in addition to that, you must be tax compliant because most lenders will ask for your tax compliance certificates. And also, if you're seeking funding from the government, there are those records and documents that they require, which include police clearance, tax compliance, business registration, and all that. The other thing you need to have is a repayment plan in mind. Don't just take a loan without a repayment plan in mind. Know your cash flow. Ask yourself, can your business support the repayment schedule that you're being given by the lender? So always borrow what you can comfortably repay. The other thing before you apply for the loan is checking your credit score. And this you can check through the CRBs that are available. Just get in touch with them and get the procedure on how you can get your CRB reports. So once you get your CRB reports, clear any loans that have been listed before applying for another loan. The other thing that you need to have is a simple business plan or proposal. These will highlight your business model, revenue streams, expenses, and how the loan will impact your operations. A business plan will show that you're serious and you're strategic. Number 7 is collateral and guarantors. For larger loans, you may need security, and that may be in form of title deed, logbook, or any other assets. For SACCOs and chamas, they may require guarantors instead. The other one is building a relationship with your lender. Don't wait until you need the money to engage with the financial institution. Open an account, maintain good transaction history, and attend financial literacy forums that they host. Also ask about pre-loan requirements, what you're needed to have in case you need a loan. These will help you get prepared early, and by the time you need a loan, you'll have all the documents in place. The other one is be honest and transparent. Clearly state how much you need and how it will be used. Don't inflate your numbers to look more profitable. Be ready to answer any questions and provide the documents with confidence. Now let's look at the common mistakes to avoid before applying for a loan. Number one is applying out of desperation. Never apply a loan in a panic. Prepare months in advance. If you apply a loan in panic, you may end up getting into a debt trap or a cycle that will be hard to get out of. Number two mistake is not separating the business and personal money. If you're applying for a business loan, the bank or the lender will need to see the business transactions. So if you keep mixing the business transactions and your personal transactions, then chances are that loan will be denied. Number three mistake is not understanding the loan terms. And I've done a full episode on loan terms. Please check after you're done with this episode. So the loan terms include the interest rates, the duration of the loan, the penalties, the processing fees. All these matter when you're applying for a loan. So ask questions and don't assume anything. Get all the information you need regarding the loan. The other mistake is borrowing either too little or too much. So if you borrow too little, you won't meet your goals. You won't be able to accomplish the purpose that you wanted to, and hence you will not be helping your business. But on the other hand, if you borrow too much, it might be a burden. The other mistake is ignoring options that are there in the market. You don't have to only look at the bank. There are circles, there are chamas, there are microfinance. So you need to look at all of them and compare their terms and conditions. We also have angel investors and grants, which are suitable if you're still in your early stages of business. There's also some business accelerator programs that come with funding options. So now let's look at the strategic tips that will help you stand out. Number one is to build a relationship with your lender before you need the money. You need to create a relationship. Don't just visit your lender only when you need the money. Make it a habit to visit your lender and create a relationship with either the branch manager, the credit manager, or even the customer relations person. And you're not creating these relationships so that they can break the rules for you. No, you're creating these relationships so that even before you take a loan, they can be able to give you the information you need and the requirements you need for a loan. The other thing, you need to keep your credit report clean. Ensure that you have checked your CRB reports and that there's no loan that has been listed that you have defaulted. The other tip is having a mentor or a consultant who will help you review the loan application forms and even the loan requirements. So getting a business loan doesn't have to be intimidating. When you prepare the right way, you don't have to chase the lenders. They will see your value. Remember, the goal is not just to get the money, it's to make that money work for you. So if you found this video helpful, please like and share it with a fellow entrepreneur. And if you need help in preparing your business finances and even a proposal, feel free to reach out. My contacts are available on the description box and even on this video. So thank you for joining me on this episode. Please like, share with another entrepreneur, and leave your comments and subscribe if you haven't done so. And see you in our next episode right here.